And in business, the stock market fell through the floor today.
The stock market, Richard.
Hard to know where
The stock market went through the roof today. No one seems to have predicted it.
With Kevin Johnson.
Greed is good. So said the legendary and notorious character Gordon Gekko in the movie Wall Street, which hit our movie screens back in 1987. Michael Douglas won an Academy Award for the role, but few friends, since Gekko was a crooked bandit and ruthless corporate raider who set out to exploit the system to his own advantage. Gekko inspired a mini-generation of stockbrokers and corporate raiders to follow in his footsteps, but those who did rapidly came a cropper. 1987 was, you see and may recall, the year of the great Black Monday crash that reverberated around the Western world. Kevin Johnson was a young Perth stockbroker at the time and well remembers the impact. These days, Kevin is a much more mature and milder businessman. Kevin, he joins us here today from Argonaut Securities. Welcome, Kevin.
Thank you, Andrew.
Kevin, how vividly does October 19, 1987 remain in your memory?
Actually quite vivid, which is quite extraordinary when I consider now that it's approaching 30 years since that occurred. And even when you look back on a long-term chart of the stock market's performance, it's actually a very small part of it. The index has gone on multiple times since then. But it was a very vivid time because it was quite dramatic. And I think that was the most important thing that occurred at the time. And I think as a young broker standing there looking at the boards, in those days all the bids and offers for every company was written up on a board, and they were called chalkies were writing these things up there. And the vivid thing is they wiped the boards. So basically there was not a buyer or a seller in any stock at all on the stock market. And they did the same thing, and there was in those days separate markets in Sydney, Melbourne, Brisbane, Adelaide. And we were just sitting there in Perth with these blank boards, not knowing what was going on, and ringing through to Sydney and Melbourne, and they didn't know what was going on. And so we were listening on the phone line, and you'd hear, I think BHP was the first market they opened up, and they sort of went, you know, let's say BHP was $16, I can't remember the price, and they'd go $12 seller BHP, $11 seller, no buyers at all, $10 seller, and then one buyer might go $7 buyer or a $9 seller, and then a market was done, and it was like, God, we've got to go through this with every single stock, you know, and that was what happened. It was just that unprecedented nature of it, and the fact that, you know, they wiped the boards, so there was no market. So you can look in a screen today, you look at a market at home on the weekend, or you buy one of your accounts, and you can look and you can see buyers, you can see sellers. Well, imagine looking and there's none there.
Quite surreal.
It was very much indeed. I think that's what the most vivid thing was. The other thing which struck me too on the day is as I was going down to the exchange that morning, one of my colleagues was coming into work, and he sort of looked at me and he gave me this big thumbs up. Hey, gold's up $25. Well, it didn't matter what other prices were doing because the overall event would far swamp whatever it might be. And often people say that, you know, they think that, okay, if something negative happens on one side, the other things will be okay. Well, they don't. They all get caught at once, because if you can't sell something, then you've got to sell something else. And invariably you try and sell whatever's the most available.
Kevin, could we see another crash like the 1987 Black Monday crash?
Well, I've often thought of that over the years, and we've often seen little examples of it. The thing about the 87 crash at the time, that was the markets had a spectacular rise upwards, so I think we haven't seen one of those yet. We haven't seen a big bubble. I think if we have a huge bubble one day, then that's quite conceivable for sure. But things are far more regulated now, and there's far less excess. There's little speculative bubbles here and there, but it's far more regulated and they're far more mindful of it. But I think what is important to note is that the times that I've seen the biggest movements in the market and the biggest ructions in the market is when it's unprecedented. And the fact of it being unprecedented means we don't know whether it'll happen again anyway.
Going back to the Michael Douglas character again, was Gordon Gekko a black mark or an inspiration to you?
Well, he certainly was a black mark. It was actually an interesting movie to watch as a young fellow, and you could learn from it, because the key character from my perspective was Bud Fox, who was his broker, or wanting to be his broker, and Bud made the mistake of stop being a broker and wanting to go out and run a company, and thought he could do it better, when frankly, you know, as brokers, our job is to bring people together and to bring transactions together.
And also, as I recall, alerting Gordon Gekko to his father, played by
correct.
Martin Sheen, who worked at a struggling regional airline.
Yeah, exactly. So he was biased in his views as well. So you have to be sort of very objective, and that's one of the things we pride ourselves at Argonaut, is being objective all of the time and having a view. And that's just what it is, and we're driven by that, and I think that makes a big difference.
Does morality come into that? Is there
completely.
Morality in the market? Because there wasn't much morality in Gordon Gekko's
well, there's far more now, because it's far more regulated than what it was back then, and there's far more knowledge now over the years, but it doesn't mean things don't occur that they shouldn't do.
Indeed. What attracted you, Kevin, to stockbroking in the first place?
Well, it was just because I was working in a bank at the time. It wasn't very interesting.
Money?
No, well, it's right, I suppose. And then I went into broking, and I started not even in the dealing side. I was on the side with looking after people's deposits. And having said that, people were getting 15% on their money in those days. So it was a pretty easy job for me to get people's deposits together and get some good returns for them. And that was always quite interesting, that even despite 15% deposit rates, people were still pouring money into the stock market. And that actually also showed you the pace that the market was moving at the time. But I then discovered some colleagues were working on the trading floor, and I went down there a few times, and I just loved the whole, the vividness of it all, and the pace of change, and I just seemed to have a skill for being able to listen to separate things, and it was just something that developed. And it was just the main thing that would still gets me going to work today, and I've been doing it for over 30 years, and I reckon do it for quite a few years yet to come, is something you don't know what's going to happen every day. You wake up, what's going to happen today, and that's the exciting thing.
So when did you specifically decide to enter the ranks of the
Well, when one of my colleagues left the trading floor, one of my colleagues had left the trading floor, and I went round to the partner's house at the time, and I said, listen here, I know he's left, but I want his job. He said, well, you can't do it because you've got your own job. I said, I'll get someone in to do my job. I would like to do that job. So he trained me up. It was December 1986, so I got 10 months of the boom, so to speak. It was a fascinating time, and it was a wonderful
crash.
time. Oh, did it ever.
Yeah.
It's just, everything got wiped out. And it was a problem we've seen. We even saw it this week in the stock market, and we see it in every week. And so we're not going to put a time on this, but if you have too much debt is the killer when it comes to things. You can't have too much debt. Suddenly if you lose that income, or the banks get a little bit nervous, it's game over for equity players.
Back in those days of 1987, stock markets operated differently to now, with traders screaming out buy and sell orders on the floor.
Yep.
How intimidating was that kind of frenetic activity?
Well, it was intimidating when you first went down there. I remember the first day I was standing there and I heard all this noise, and I went, oh my goodness, I'm not going to be able to do this job. But it's a skill you develop, and it's true with so many jobs around. You develop a skill that suits that particular vocation. But when they started to bring in what's called now the seats terminal, which is the electronic trading, I looked at that and I thought, this job is going to be redundant, or it's going to be a good job for some people who want to sit there and enter stuff into screens, and that's fine. I'm not that sort of guy. I like talking, I like analysing, and I like advising people. So I basically had to restructure my own job and my own career and become an advisor and telling people what's doing. And it's difficult because you're not always right, and you do get things wrong, and you certainly learn over the years. So my own particular skill I developed was being the eyes and ears for people that are busy. And if you've got a career or a job or a business you're running, but you like to invest in the stock market, then you're going to know there's someone sitting there watching out for you.
Okay. How did that whole floor trading system work, and how did they get it right?
Well, it was just a system that had been developed over 50 or 60 years.
And did they always get it right?
I think so, yeah. It was quite extraordinary. You had to have these little bits of paper, and you still see footage these days of some of I think it's the Chicago Futures Exchange, and they're exchanging bits of paper. They do, because in any transaction, like I said, you're a broker, you're doing matching up a buy and a sell order. And that's what you're essentially doing. So the buyer wants to buy and the seller wants to sell. So you will find that person. You will find those bits of paper. And like I said, it's just a skill you develop.
The pace of it, though, it seems to be a secret society at work, rather loudly, though.
Well, it was. There was far less companies on the exchange in those days, so it wouldn't be possible now with the number of exchanges, the number of traders, because we've had huge population growth, the number of investors around the place. It was very much a secret men's business back in those days. I remember when I first bought shares in 1986. I was with my mother, actually. We bought some MIM shares because we'd heard about this, and it's something that stayed with me ever since, because if you're an investor, you're really faced with three choices. You can put it in the bank, you can go and buy some property, or you can go and buy some shares. To me, they're your three passive choices of doing stuff with your money. And a lot of people have never bought shares, and I think they miss out. And I look back on the property market in the 80s and 90s and how cheap it was, and I look at where it is now, and I start to wonder now, how can people make money these days? Unfortunately, I think the stock market is one of those things.
I imagine some people are afraid of getting into the share market because of the downsides, possibly, to what can happen to their invested money. Should people perhaps just be a bit braver and take the plunge with shares?
I think so.
Prudently, of course, and with great advice from the likes of you.
Correct. I think that's the important thing. You've got to do your research, but I don't think you have any choice now. Like I said, with property prices where they are, with interest rates where they are, I mean, it might sound like I'm very biased, but I've given it a lot of thought and discussed it with a lot of people recently, because I particularly not worry, but I'm concerned about how do young people get ahead. I was lucky. I was born in the 60s, and so the 70s, the 80s, the 90s have had some wonderful asset increases. But I wonder now, I look at my own children, how are they going to get somewhere where they can get, if you like, which is what they're trying to grapple with all the time in Canberra, how are people going to get enough money to buy a house, for example? So to me, the only way they can really do that is they've got to invest, or they can't really save because they're not getting paid that much. You know, there's not excess wages around anymore. So really, the only way you can do it is to invest. And I think that in itself is an exciting phase, I think, going forward.
All right. The system is much more orderly these days, as you pointed out.
Yep.
But is it still as exciting as it was then?
Oh, absolutely. In fact, more so, because
Even more adrenaline?
Well, it can be, but at the moment, what's exciting about, which gets me excited every day, is there's so much news now and so much information. We're so up to pace with it all, and you've got to learn to block out the noise. And, you know, it's very easy to, you know, what I often see with clients, you know, I'll be telling them something, you know, week after week after month, you know, should do this, should do that. And then one day it'll appear in the paper, and suddenly they're excited. No, it's in the paper, really? That's, you know, to me, that's almost like a selling point. When it's finally, it's filtered that far through to the mainstream, you know, what you try and do is try and be ahead of the pack. I think it makes a big difference.
All right. Kevin, how much money do you need to invest in the share market? Is it possible to make a fortune with that level of investment?
I think so. You know, I think you can start with a very small amount of money. I don't have any problem with that. I mean, for example, my own children, right from when they were born, I used to, if we had a float or something coming, I'd put $2,000 into it. I'm quite surprised as to how much that's grown over the years by taking a long-term point of view. So no, don't be scared off by, but you do need at least, in my mind, you do need at least 5, but I'm happy for people to invest 2 if they're starting out, and particularly if they're young people. But, you know, going back to what you were saying about people, should they be scared of the market? You know, I've had a number of people say, oh, I won't buy shares because, you know, I lost money on them once. And I always reply to them, so if the first girl you kissed was a bad experience, would you have never kissed another girl in your life?
The statement, greed is good, may have outraged, or it did outrage many people 30 years ago. But is it still the main motivator for investors?
Well, I think it can be, and it's not exactly a mantra you should live by, obviously, but it does help that if you want to make money, like I said, then it is a mechanism for doing that. It can be very good if you've got a very good quality share, and I've seen, and there's sort of 3 or 4 companies out there that I've seen over the last 30 years: Commonwealth Bank, Wesfarmers, CSL, which is Commonwealth Serum Laboratories. You've got to be greedy on those companies. You just got to hold them and never sell them. And now they pay dividends far in excess of what you paid for your shares. It's different in some mining stocks because there's a lot of volatilities, a lot of speculative activities, a lot of fads like yo-yos and skateboards, but the same thing happens in the share market. You know, so you've got to be aware of what it is that's driving it. What is it got real cash flow? Has it got real people running it? Is it a real asset, or is it a dream or a bit of passion? And that's when you need some advice sometimes, or you need to be a bit realistic. So yes, greed can be good if you've got the right asset. But greed can sometimes be the wipeout for you. And
what's a better mantra than greed is good?
Walk around with your eyes and ears open is one thing I always say to people. You know, just to keep an open mind all the time. And shares aren't children is another thing I say to people. And some people get so protective of their shares and such. You know, they're almost married to them. And I say, you know, I always used to describe it that shares are just 3-letter codes with numbers attached to them. So you've got to be, you know, you've got to be unemotional about it. You know, and I see that people come in to see me and they talk about their shares, and I say, look, then one way you're going to make money in the stock market is you've got to do the opposite to your emotions. And they look at me and go, what do you mean by that? I said, well, it's quite simple. I said, if you're worried about the stock market and the news is negative and things are terrible, that's when you should be buying. And I said, if you're happy and you're excited and you're running around, you're telling all your friends, that's when you perhaps should think about selling. And they all look at me and they go, oh, yeah, that's good advice. Yeah, I get that. And then months go by or years go by, and I'll ring them up and say, about times, oh no, I can't sell them now. They're going up, you know. Oh, I don't want to buy any shares now. In fact, I'm thinking of selling them all, you know. Like it's just, and it's a hard thing to actually execute, you know. But it is important.
All right, Kevin, you've been a follower of horse racing in your time. How would you compare punting on the share market versus betting with the TAB?
Well, I often get asked that question because yes, I do. You know, it's one of my hobbies, if you like, and it is only a hobby. The difference is it's very clear: is the race in the stock market never stops. And it can be a binary outcome if you're drilling an oil well, for example, but as a general rule, the race is always ongoing. It's open for 6 hours a day, it trades for 6 hours a day, and then there's another day, and another day, and another week, and another time. So it's completely different, and one's complete gambling and one is investing, and there is a big difference.
Australia's economy is struggling, just past $500 billion in debt. Wow. Is there a risk it will affect people's attitudes to investing in the share market?
Well, I think certainly those sorts of thoughts can do, and that's part of the noise that I was referring to earlier. It's important, I think, to have debt for governments and for companies. It's also important to have the max amount of debt at the lowest point of the interest rate environment. It does bother me what will happen if interest rates go up, and as I said at the beginning of this, it was, interest rates were 15 and 18 and 20% a long time ago, and a lot of people, if you're listening and you can't remember that, you ask your parents or your grandparents, they'll tell you, oh yeah, they were definitely that. I had to borrow money at 22%, but we got by. So it's an interesting issue. It bothers me at the moment that the debt is so big, and how do you repay it? Well, the only way you can repay debt is to generate cash, and you can't generate cash by putting on new taxes, because new taxes take from the economy, and the only way economies grows if you give. So if you inject some money into it, then that money gets spent, and it gets spent by someone else who earns it, and they all pay tax, and the whole thing grows. And at the moment, it's all contracting. Everywhere I look, they're reducing this, taking that, adding a tax in here, adding a tax in there, taking cheap shots all the time. There's no strategy to really grow things. So what's important, what really matters at the moment, okay, let's say it's half a trillion, that's $500 billion.
Yep.
What is important is what have they done with that money? Where has that money been spent? Has it spent on assets that are now generating cash? And that's the key thing. We'll only find that out over the next 5 or 10 years.
Yes, and I certainly do remember those stratospheric interest rates of the early 90s.
You would do,
They're hard to
We
forget.
survived though, like
We
that's
did.
why. And there's big fears. What if they raise rates too high? The thing will collapse. Well, it's still a long way from what it was. Money is cheap at the moment. I mean, from that point of view, in terms of if you are borrowing it, I remember when my first housing loan, which was back in the 90s, and I borrowed money at 10.5%. I thought, how cheap is that? I better fix this for 3 years. And when that expired, it was 7.5. I thought, how cheap is that? I'll fix it again. And then I think the last one was 6. I think now I'm hearing today numbers like 4.5 or 5. It's quite extraordinary how cheap money is.
Speaking of growth areas, cannabis is attracting a lot of interest from investors these days. Yet only a few months ago it was illegal. What's the story there?
Well, it's one of those fads I was referring to earlier, and we've had them all the way along the line.
Yeah.
We've had uranium booms, we've had gold booms, oil booms, nickel booms. So they come and go. What matters is whether a real company emerges out of it with real cash flow and real earnings. So
we're talking about medicinal cannabis.
Medicinal cannabis, yeah. Well, look, it's an important area, and there's a lot. It's new because it was illegal. What you've got to understand, which is why people love new things, I suppose. I'll just digress a little bit, but anything new, because they're used to there's so much analysis and knowledge of everything else that's out there. If something new comes along, it just sparks people's interest, And so cannabis at the moment is one of those things because it was illegal, which means it was illegal to research it, to deal in it, to have it. So now it is legal. Well, okay, well, who wants it? How much are they going to pay for it? How big's that market going to be? So it's still very much in its infancy. And while it's in its infancy, the first in obviously performs the best.
All right.
And then everyone else joins in. It can dilute the whole interest. But it is something that is interesting for sure.
And the opportunities could be very exciting.
They can be if the right company emerges out of it. Yeah, there's always one emerges out of it. Like we've got some great gold producers in this state and some great iron ore producers. There's a lot of people that wanted to be an iron ore producer or a gold producer that never did become them. So it becomes you got to analyse and find out which are the best ones.
Let's stay with the minerals.
Yes.
Those of us old enough to remember the nickel boom of the 60s and 70s when Poseidon was deemed the glamour stock. Will there ever be another opportunity like Poseidon?
Well, that's interesting. I've actually read quite a bit about the Poseidon boom. There's some great literature over the years of it. And the one reason why, in my mind, I don't think it can happen again is because in those days they didn't have very many shares on issue. And if you look back on Poseidon, they only had 2 or 3 million shares. It was a very archaic system those days. There wasn't many people involved in it. It was like a secret men's business. It reminds me a bit of Bitcoin these days, actually, where Bitcoin has got a certain number of Bitcoins out there. Only a few people know about it. We all hear about it. We hear it in the press, but frankly, we're all looking, going, well, how would you do that? So, and that's, I think, what the Poseidon boom was like in those days. It was, it was guys in business in Perth or in mining or Kalgoorlie, and it was and some in the UK and Sydney, and it was just like a secret men's club. So these days, I've noticed companies are too quick to issue paper all the time, to print paper, like governments do at the moment these days.
Indeed.
They're too quick to print paper, so it dilutes the impact of that happening. If I look from a holistic point of view, some of the best performing companies are those companies that haven't issued very many shares. So, and often I look at companies that are $3 and $4 and $5, particularly in the mining spaces, which Argonaut specialises in. They're the companies with 150 or 200 million shares. The ones that have got 1 billion, 2 billion, 3 billion shares, they never amount to anything.
Kevin, I suppose the $64 million question, which sector would you recommend investors get into in the future?
I think we might save that for another time.
All right. Okay. Kevin Johnson, Executive Director of Argonaut Securities, thank you for joining us today on the Sattler Files.
Thank you.
And in business, the stock market fell through the floor today.
The stock market report
Hard to know where
The stock market went through the roof today. No one seems to have predicted it.
with Kevin Johnson.